All right, this is your market recap for April 3rd, 2025. Today we played bearish once again, following the Trump tariff announcement yesterday. So let's get down to the hourly to see why we played bearish. So on top of the overall bearish, I'll say bearishness of the tariffs, we just strictly looking at the charts, not caring about news or whatever. We had an SMT of these hourly highs here, which would, since we were retracing, an SMT of these highs would stop that retrace and take our draw back to here, which we don't hit here. We also react off this hourly fair value gap here at 8, making our 9 o'clock. Wait, no, sorry. We reacted off at 8 and then back at 9, with this still as the draw on liquidity for the day. We then just clear this low, come down to there and there. There's no other liquidity on the higher time frame that we could have swept today, just this one big green candle that we were just kind of painting over. So if we go down to the 15-minute, we can see this SMT there between NQ and ES. There's this 15-minute fair value gap here, which market opens, comes up, sweeps this high, right? So we take that opposing liquidity before heading bearish for the AM session, targeting this low as our drawn liquidity. We then go down, close decently below it. 11 o'clock, it's time to retrace. We come up. This is relevant on the 5-minute, so we'll talk about that in a second. And then we continue our move from AM session, which is bearish, with this as the new draw on liquidity for that. So once we sweep that, get a little retrace, and then just continue lower from there. Now, the 5-minute, we can see better the manipulation upwards, taking out this. You can see that within this 15-minute, we took out this liquidity here, right at concrete encroachment, by the way, and we didn't even try to close above it, right? We swept it, and we immediately came back up off of it. So another sign that we're playing bearish. Then we come down, react off this 5-minute fair value gap, which validates this right here as a fair value gap, in my opinion. We then, during the macro is when that retrace happens. We come down, close below it, and then use this 5-minute as an inverse multiple times to take us down once again to the draw on liquidity for AM session. Continue a bit lower from there, and then during the 10:50 to 11:10 macro, which is usually when markets reverse because that's when London session closes, we catch a nice retrace up above this equilibrium, yes, but more specifically this, the high of this candle right here, which price reacts off the top of this 5-minute inverse before continuing the move lower, right? I say the reason we reversed here is because we hit past equilibrium, took out liquidity, and we're at an array. I mean, if we measure all of AM session, equilibrium's here. Sure, we have this order block. But we need a deeper retrace than that due to us taking out this higher time frame low. And at the end of the day, the lunch retrace does seek equilibrium, but in my opinion, it also seeks out liquidity, right? Because at the end of the day, what's moving these markets is targeting liquidity. So we come up, take this liquidity, close a little above it, but then go horizontal from there, telling us we're reversing. Come back down with the new draw down here, and we hit that. After the algorithm resumes, we come up, take out these highs right there, and then continue lower from there. I'll be honest, not much happened today, just very slow. It's almost just like a trickle. Price trickled down. It's still paid attention to arrays and to the timing and stuff, but I mean, this is the kind of price you expect from, getting close to non-farm payroll. So once again, 9:30 market open. Even if I was bearish here, I would have looked to see price come up for multiple reasons. 9 o'clock, we started playing bullish. We already had a very large bearish move. So we're coming up, taking out this liquidity there. Once again, just wicking above it, even on the 1 minute. Get this SMT here. This would have been my trade, this setup. So SMT here between NQ and ES. Since high time frame I'm bearish, I would have traded on ES since it did not take out this high. I would have entered on a 15-second change in the state of delivery downwards, which would have won and secured me like a 1 to 2, maybe a 1 to 3 if I got out perfectly at the low. But this retrace here would have taken me out at break even. Thinking of ways to predict that this would happen, or anticipate, I should say. Got the SMT. Start the move at 40. I would have entered at 40. Could have waited for the macro, but there's no confirmation that the macro will do anything. 40's far enough away from the macro, so those highs are safe in my opinion. Wait, no, what did I take the other day? I don't remember when I entered. I think I entered 40 and then so wait, I wrote it in my notebook here. Let's see. Within 10 minutes of macro, wait for the macro. So if I'm following that, I wouldn't have entered here. I don't know that I would have entered here because I didn't see an SMT here. But maybe if we get this SMT here and then just catch this retrace, all we need is a change in the state of delivery and a fair value gap. So I will be looking out for that, but that would have been trade of the day here. 15-second change in the state of delivery on this high. Why here? 1, because it's in the macro. 2, we have an SMT backing it up. And 3, because it's within this 1 minute fair value gap there. So from there, we would have targeted these lows here, relative equal with this low and this low. Take that out, come a little lower during this macro, the 1050 to 1110, like I mentioned earlier. London closed, so we're looking to retrace. I would have looked to take liquidity here, here, and here. We end up coming all the way up here, which is okay. It's a deeper retrace than usual. This would have been fine, in my opinion, taking out this high. And then we kind of slowly work our way back down. There's a lot of both the green and red candles today. There's no huge extended price run without a substantial retrace. So if you're entering in a long-term position, you have to be fairly certain that that will be the high of the move. Like, for example, here. Because if you enter here, even on the macro right here, you get 1, 2 retraces above that and you're out, right? So you just have to be careful on, getting close to NFP. So once we took out this high, we push up once after taking it, then we push up once more, trying to take it. And we do take it, but then we immediately come back off of it. So in my mind, we sweep it, fail to continue higher, drop down, change in the state of delivery, we're now bearish. That as well as the overarching bearish trend set by this hourly right there, and just the overall bearish trend. Continue lower from there, algorithm kicks back in, so we come up and take a little bit of buy side liquidity before continuing lower. We then retrace up to somewhere within here. I don't think it's a 5 minute even. We create an SMT there. Last hour of trading, we do take out these highs. I think we take them out on NQ. I can't really tell. No, we take them out here by 0.75. 3 ticks, we take them out. And then obviously changing the state of delivery with these candles here. Boom, target this draw on liquidity there. And then once we hit that, we kind of just falter out. Tradable day, yes. Easy day, no. You'd have to choose the right trade and be patient and accept that you're not going to get a large extended price run, just like what would have happened here if I entered. If I entered here, would have gotten a 1 to 2, maybe a 1 to 3 if those were my finals, and then I would have gotten out at break even. All right, so no crazy long extended price runs, but does pay attention to the overall direction of the markets. Played bearish, took out this low, retrace for lunch, continuation. Right, so higher time frame. If we look on the weekly, geez, what the heck? Oh my gosh, we're here. All right, 20% of the weekly range. If we throw up, I don't think I have them there. 20 and 30% means we're looking, as of now, with this low as it is, we're looking for 18.8 and 19 flat for retrace. I'd be okay with that. That would fill in some of this. Right here is 19. It would get us right back up there. But tomorrow is NFP and Powell speaks, so if I do trade, I will be extremely cautious when doing so. So yeah, this has been your market recap for April 3rd, 2025.